Here is one number that reframes the entire AI power trade. A single utility, AEP Ohio, told regulators that data center developers had asked it for more than 30,000 megawatts of new power. 30 gigawatts from one utility. But watch what happens as that number moves from a request toward a real contract. About 13,000 megawatts paid an actual study fee, and only 5,642 megawatts, under 6 gigawatts, signed a binding agreement. Same demand, 3 completely different numbers. This is not a story that AI power demand is fake. It is very real. It is a sharper question. When a stock like Vistra or Constellation is priced for an AI power boom, which of those 3 numbers is the market actually paying for? The request or the contract? Start with the funnel itself, because it is the whole point. AEP Ohio laid the stages out for its regulator. Stage 1, more than 30,000 megawatts of new data center service requests. Stage 2, of those, about 13,000 megawatts cared enough to pay a study fee, real money, put down to reserve grid capacity. Stage 3, only 5,642 megawatts actually signed a binding agreement. So the request pile was more than 5 times the signed pile. Now, add the contracts that already existed before the new tariff, and the utility's total contracted data center load through 2035 is about 17,800 megawatts. That is a real generational number. But it is a fraction of what the raw 30,000 megawatt request headline first implied. The headline is the request, the business is the contract. So, why is the request number so much bigger than the contract number? Because of how developers shop for power. A single data center campus is not loyal to one utility. Its developer files the same project with several utilities and grid operators at once, hunting for the cheapest, fastest connection it can get. And each of those filings shows up in that utility's interconnection queue. So one real project can be counted 3, 5, even 7 times across the map. That is why the inquiry queues utilities report run into the hundreds of gigawatts, far above the load they ever expect to actually sign. Exelon put a hard number on it. Only about 22% of its roughly 65 gigawatt pipeline was likely to materialize. Read that again. The company expects nearly 4 out of 5 gigawatts in its own pipeline to never happen. The queue is a list of shopping trips. Now zoom out, because this is not one utility being sloppy. Grid Strategies, an independent power research group, compared what utilities across the country are forecasting for data center-driven demand growth by 2030 against what market analysts think is realistic. The utilities' forecasts sum to roughly 90 gigawatts of new demand. The analyst's estimate was closer to 65. That gap, as much as 40%, is the phantom layer. And it is not harmless, because that inflated number is what justifies new power plants, higher electricity rates for ordinary customers, and the entire AI power investment thesis. Even Ohio's own utility commission staff, as summarized by the state's manufacturers group, flagged that AEP Ohio's data center forecast looked overstated and double-counted the same load across different customer classes. When the referees start questioning the scoreboard, the number deserves an audit. Now the other side, honestly, because phantom does not mean zero. The demand that survives the funnel is still enormous, and it is still growing. AEP's contracted pipeline did not shrink over the past year. It grew as more of those shopping trips converted into signatures. 5,600 megawatts of new binding data center load at a single utility is a genuine, once-in-a-generation build. And in the tightest regions, the grid really is short. In the same window, one major capacity auction cleared at its legal price ceiling, and still came up thousands of megawatts short of what reliability required. So the bull is not wrong that AI needs an enormous amount of power. The bull is only wrong in one specific way: if it prices the 30 gigawatt request as though it were 30 gigawatts of signed, paid, 20-year cash flow. So, what actually settles it? Not the headline gigawatts. 3 things you can watch instead. 1. The conversion rate. How much of that study fee pile turns into binding contracts in the next few regulatory filings? Rising conversion means the demand is hardening into something real. Flat conversion means the queue is still mostly air. 2. Contracted megawatts, not queued megawatts. The number that becomes a 20-year power contract is the only number that becomes cash flow. So track the signed line and ignore the inquiry line. 3. Whether the utilities revise their demand forecasts up or quietly down. When the audited number and the forecast number start to converge, the phantom layer is clearing. Until then, the queue is a wish list and the contract is the actual business. So, back to where we started. 30,000 megawatts of requests, 5,600 of contracts at one utility. Every stock in this trade, Vistra, Constellation, NRG, Talen, is priced on the promise of AI electricity demand. And the single most useful question you can ask about any of them is not whether AI demand is real. It clearly is. The question is which number the price is leaning on, the queue or the contract. One is a list of shopping trips. The other is a signed, decades-long check. Audit which one you are actually paying for. This is educational analysis of public regulatory filings, not investment advice. Verify every figure yourself before you act on any of it.